Hi everyone, we from Group 8 of the lecture ATF 10503 Financial Business. Our lecturer is Dr. Zamino Binti Zamzamil.
Our group member. First, Pawanitra, Supavetini, Li Huiling, Shemenchin, Tan Yong Ho, Hong Ija, and Tirish Shalini.
Here are the introduction of 7-Eleven and MyNews. Convenience store industry is growing due to evolving consumer preference, urbanization, and digital advancement. 7-Eleven and MyNews are key players in the Malaysian market, focusing on strategic expansion and product diversification. The report analyzed their financial performance, profitability, liquidity, efficiency, and market value. Next is business nature. 7-Eleven, a globally recognized franchise offering ready-to-eat meals, beverage, snacks, and personal care items. It emphasizes digital integration, partnership, and customers' convenience. MyNews is a Malaysian convenience store chain focusing on food retail and lifestyle products. It differentiates itself with an in-house food processing center for fresh meal production.
Liquidity ratio of the 7-Eleven. First, current ratio. Current ratio of the 7-Eleven increased from 0.94 times to 1.16 point and equal to 0.89 times from the year 2022 to year 2024. Is meaning it is better able to meet its short-term liability using its current asset. Second, cash ratio. Cash ratio of the 7-Eleven increased from 0.27 times to 0.1 times and decreased to 0.22 times from year 2022 to year 2024. This reflects strong liquidity to meet short-term debt without depending on receivable or inventory. Third, quick ratio. Quick ratio of the 7-Eleven increased from 0.55 times to 0.84 times and decreased to 0.47 times from the year 2022 to 2024. An increase in the quick ratio is shown an improvement in the company's short-term liquidity ability to make immediate liability using highly liquid asset. The last one is net working capital ratio. Net working capital ratio of the 7-Eleven increased from negative 0.014 time to 0.071 time and decreased to negative 0.048 time from year 2022 to year 2024. When the NWC ratio increased, it generally showed improved liquidity. This suggests that the company had more current asset relative to its liability. In the other hand, the ratio of the 7-Eleven, debt to asset ratio. Debt to asset ratio of the 7-Eleven decreased from 0.91 times to 0.856 times from the year 2022 to year 2024. A decline in the debt to ratio showed that the company had reduced its demand on the external debt financing compared to its total asset. Second, debt to equity ratio. Debt to equity ratio of the 7-Eleven decreased from 10.63 times to 5.96 times from the year 2022 to year 2024. A decline in the debt to equity ratio showed that the company had reduced its financial leverage by lowering its dependence on debt financing relative to shareholder equity. The third one is asset to equity ratio. Asset to equity ratio of the 7-Eleven decreased from the 11.63 times to 6.93 times from the year 2022 to year 2024. A decline in the asset to equity ratio suggests that the company is depending less on debt and more on equity to finance its asset.
Profitability ratio 7-Eleven. There are four types of profitability ratio. One is net profit margin, gross profit margin ratio, return on asset ratio, and return on equity ratio. The net profit margin for 7-Eleven decreased from 3.14% to 2.82%, and after that gradually rose again to 2.84% from 2022 to 2024. Considering all the operating causes in the ratio, it is clear that even though profits are up, costs have also gone up. But there is a tiny increase in 2024. The general trend indicates that operating costs are still an issue. Gross margin ratio. Since 2022, 7-Eleven Malaysia's gross margin ratio has gone up from 29.94% to 30.88%. The trend reflects an increase in the company's efficiency when managing its expenses relative to how much money it earns, using eco-friendly materials for packaging. Developing good pricing plans can lead to growth. Return on asset ratio. ROA for 7-Eleven Malaysia has gone up and down, ending up with a small overall decrease during the observed year. In 2022, inflation was at 2.71%. It went down to 2.553% in 2023 and rose again to 2.70% in 2024. It tells us how capable the company is in turning its available assets into profits. Return on equity ratio, like ROA, return on equity ROE has also changed, dipping a little from 11.78% in 2022 to 11.47% in 2024. It reveals the return that shareholders get for their investments in the company. The company tries to produce shareholder returns yet good net profitability and debt usage have factored into the result.
Efficiency ratio 7-Eleven. First is inventory turnover ratio. Inventory turnover ratio of the 7-Eleven decreased from
5.98 times to 4.82 times from year 2022 to year 2024. A decrease in the inventory turnover ratio shows that a company is taking longer to sell its inventory or holding excess stock. Second is account payable turnover ratio. Account payable turnover ratio of the 7-Eleven decreased from 2.95 times to 1.94 times and increased to 2.22 times from year 2022 to year 2024. A decreasing ratio means that the company is taking longer to pay its suppliers. An increasing ratio shows the company is paying its supplier more quickly. Last is asset turnover ratio. Asset turnover ratio of 7-Eleven increased from 1.005 times to 1.191 times from year 2022 to year 2024. An increase in the asset turnover ratio shows that the company is using its asset more efficiently to produce revenue.
Liquidity ratio MyNews current ratio of the MyNews decreased from 0.69 times to 0.84 times from year 2022 to year 2024. A decreasing current ratio is an important financial indicator that warrants close attention from management, investor, and creditor. Cash ratio of the MyNews increased from 0.0526 times to 0.981 times and decreased to 0.0964 times from year 2022 to year 2024. An increasing cash ratio shows a stronger liquidity position. A declining cash ratio may raise concern about a company's immediate ability to immediate cover its current liability. Quiet ratio of the MyNews increased from 0.33 times to 0.42 times and decreased to 0.399 times from year 2022 to year 2024. An increase in the quiet ratio generally signals a stronger liquidity position. A decrease in the quiet ratio may raise worry about liquidity. Net working capital ratio of the MyNews increased from negative 0.109 times to negative 0.051 times and decreased to negative 0.060 times from year 2022 to year 2024. An increase in the net working capital ratio signals an improvement in liquidity. A decrease in the net working capital ratio might show a tightening
Level
liquidity.
ratio of the MyNews. Debt to asset ratio. Debt to ratio of the 7-Eleven decreased from 0.91 times to 0.856 times from year 2022 to year 2024. A decline in the debt to asset ratio showed the company had reduced its demands on external debt financing compared to its total asset. Second, debt to equity ratio. Debt to equity ratio of the 7-Eleven decreased from 10.63 times to 5.96 times from year 2022 to year 2024. A decline in the debt to equity ratio showed that the company had reduced its financial leverage by lowering its dependence on debt financing relative to shareholder equity. The third one is asset to equity ratio. Asset to equity ratio of the 7-Eleven decreased from 11.63 times to 6.96 times from year 2022 to year 2024. A decline in the asset to equity ratio suggests the company is depending less on debt and more equity to financing its asset.
Profitability ratio, MyNews. Gross profit margin. Gross profit margin of the MyNews increased from 33.65% to 37.55% from year 2022 to year 2024. An increase in the gross profit margin shows that the company is earning more profit from each unit of revenue after deducting for the cost of goods sold. Operating margin. Operating margin of the MyNews decreased from 3.33% to 0.997% and increased to 1.95% from year 2022 to year 2024. A decrease in the operating margin suggests that operating costs are rising faster than revenue. Return on asset ratio. Return on asset ratio of the MyNews decreased from 3.76% to 1.36% from year 2022 to year 2024. A decline in the return on asset ratio shows that the company is generating less net income per unit of asset. Return on equity ratio. Return on equity ratio of the MyNews decreased from 10.61% to 3.61% from year 2022 to year 2024. A decrease in the return on equity suggests that the company is generating less profit per RM of equity invested by shareholders. This shows a decline in financial performance relative to the equity base.
Good day everyone, my name is Vanitra. I'm going to present about efficiency ratio of the MyNews from the 2022 to the year of 2024. Firstly, I'm going to tell about inventory turnover ratio. Inventory turnover ratio of the MyNews decreased from 5.70 minutes to 4.91 minutes from the year of 2022 to the year of 2024. A decreasing in the inventory turnover ratio shows that inventory is being sold and replaced less frequently. The second is account payable turnover ratio. Account payable turnover ratio of the MyNews decreased from 3.45 minutes to 2.92 minutes and increased to 2.97 minutes from the year of 2022 to the year of 2024. A decreasing ratio of the company is taking longer to pay its supplier. A increasing account payable turnover ratio means the company is paying its supplier more quickly. Thirdly, asset turnover ratio. Asset turnover ratio of the MyNews increased from 1.12 minutes to 1.26 minutes from the year of 2022 to the year of 2024. An increase is the asset turnover ratio means that the company is generating more revenue per unit as an asset. Thank you.
Here are the recommendations of 7-Eleven and MyNews. 7-Eleven expand digital payment solution and loyalty programs, improve supply chain efficiency, introduce healthier food options, and explore e-commerce partnership for online delivery. And MyNews strengthen food retail operation, enhance logistics, invest in marketing, and expand store location in high traffic
Advice
areas.
for company on the source of fund. First, retain earning. This method is the most sustainable and economical source for funding. It allows the business to avoid debt and maintain full control without dilution of ownership. Second, equity financing. Angel investors are a common resource for equity financing for early stage of company. This individual provide investment capital in exchange for equity. Third, venture capital. Venture capital offer large amount of funding, strategy guidance, and access to industry connection. They expect high return and may need control and oversight. The fourth one is crowdfunding. This platform like Indiegogo help the business to raise small amount of capital from a large amount of investor. The last one is debt financing. The debt financing involve borrow funds with the obligation to repay them with interest. Bank loans are traditional and widely used for the debt instrument.